78% in 6 months and change. What's going on? It's Ryan here, head quant at happytrader.io, and I wanted to go over Ethereum today. And we want to specifically go over what's been doing best for Ethereum. Has it been the long-only strategy for Happy Trader? Has it been the long and short-only strategy for Happy Trader? One thing we do know is that Happy Trader has been the best indicator that we have ever tested, and it is only available at happytrader.io. So now that I got that shameless plug out of the way, let's go ahead and get into an Ethereum backtest. So the first thing we want to make sure is that we're looking at the Ethereum futures. That's going to be via the CME. And then we're just going to be starting with our long-only strategy. So this is our tried and true. And you can see when we turn on our long-only strategy, we get superimposed right over our uptrend and downtrend signals with just a simple buy AI and close entry order for that buy AI. So essentially taking the trade on the uptrend and then dumping the trade on the downtrend. Now, most traders don't trade this way. They don't just go arbitrarily from one to the other, right? A lot of traders are going to see we have a huge move like this. They're going to want to take profits here, but it looks like you would have been taken out of the trade in this particular circumstance. This is why I like to go out to like the 45-minute chart. You have much more manageable trades. And you can see here, we are on an uptrend currently, and that's how Ethereum is trading. We're going to notice with Ethereum, even on the swing trading timeframes, is that you're going to have a lot of weak trends in both directions. It's kind of more of a scalper's game. But let's go ahead and look at our long-only backtest and see how it does. So what we'll do is the year-to-date for 2024. So we're just going to do 0101, and then today's date is June 19th. We are really moving through this year. It's crazy. It's going very, very quickly. The next thing we want to do is look at the settings. So the next thing we're going to do before we do any sort of back testing is we're going to actually emulate what a real overnight hold would be on Ethereum. It's not the most attractive returns because look at this. To get your overnight margin, you have to be holding $56,199 in your margin account. Now, what's good is that there are micros and there are other derivatives, like look, Coinbase derivatives has Ether futures that require a fraction of that. But what's interesting is that the Coinbase futures require more intraday margin. I don't know if that makes a lot of sense. I don't know who's running futures over there at Coinbase, but that's really how that's going to go. Let's see what else we have related to ETH. Yeah, it looks like that's pretty much gonna be it. You do have your nano ether, so props to Coinbase for that one. If you want just exposure to Ethereum, you can look into this. You only need $121 in your account. 25 if you could potentially go, if you're an Ethereum trader, you could potentially go somewhere from just the progression of using Happy Trader to essentially paper trade, right? You want to paper trade with real-time data. And then the next thing you want to do is make sure that you're getting into, a smaller contract that's manageable for your account size. Now, if you're a big baller, you can come in and trade Ethereum full size right from the CME. That's the Chicago Mercantile Exchange, the OG of futures trading as far as clearinghouses. Or you can go to Coinbase derivatives and pay less for your margin. It all depends on your individual situation. Now, it also depends on the liquidity of the instrument, meaning how much is traded daily. And that's going to affect slippage and some other types of measures of how you're going to do. So we're going to pit our indicator up against the Ether contract, so just the CME. So we're going to do the 56,199. Let's go ahead and do that. 56,199. And we're going to do one single contract, no pyramiding. And we're going to stick with the 45-minute chart, and we're on the long only. So let's go ahead and generate. See what we come up with. Okay. So we're about halfway through the year. Typically, the S&P 500 does 7 to 11% per year. We're at 33% on the long only, right? Ethereum's been going up and down all year. It's almost constantly doing that, going up and down. But the overarching trend over a larger time frame has been up because we're in this kind of quasi bull market, as I'm going to call it. Now, there was a large drawdown. If you subscribe to the channel, I explain how to deal with these drawdowns, both mentally and also by using hedges. But you can see we barely lost here coming out of the gate, and we had some very, very, very nice gains. And let's go to absolute to see what the dollar amounts are. And you can see here that, yes, we drew down just very slightly and then just started kind of coasting up, almost retouched that, but we were still in the profit zone. So if we had a hedge set up like down here, just below this area, a couple percentage points down, and then we throw our hedge on, and then we wait for core position to rise back up into the green, and then we start to unwind that hedge. It causes a little bit of portfolio drag, but that's how you would protect your money in that situation. Now, one other thing I need to mention, none of this is financial advice. This is for educational purposes only. And now that that's out of the way, we have 33.36% net profit here year to date on one contract of Ethereum. That's really, really nice. If this were to hold for the entire year, you know, you're looking at almost a full-time income on one contract. And if you're trading on Coinbase and you have less margin, this is going to about triple. You'd be up about 90% depending on the liquidity of that particular instrument. Some other parameters that we do want to look at are, you know, while we're on the 45-minute chart, we're looking at the long only with Happy Trader. How did we do? Do we measure up to the normal back test? And we do. So I like to talk about Happy Trader conventions, which are winning about 1 out of 3 trades. A lot of folks are going to throw you off, especially if you're a brand new trader, with win rate or percent profitable, as it says in TradingView, because expectancy is not correlated to win rate. So I'll say that again. Expectancy, meaning how much money you're going to profit, positive expectancy in this regard, is uncorrelated, and in fact, it's decorrelated. There is no correlation between win rate and percent profitable. There are certain exceptions to every rule. As a general rule, if your winners are larger than your losers, as they are with our trading strategy, you can get away with an extremely and almost criminally low win rate, and that's some of the special sauce. As you can see here, $175 loser, and then we had that ran up to 4,600. Could have took profit on that first trade even though it was a loser. Then we had trade number 2, $6,700 in profit. Trade number 3 was a $1,300 loser, but we had the chance to take $23.75 in a run-up. So every trade's giving you the opportunity for the run-up. And you can see the main theme is that even if we take, you know, a string of 3 nasty losers, over the course of this is about a week here, well, once we get our signal, we're taking this big winner, and then we have another big winner that more than make up for it. So what we can do is then go back to the overview. So percent profitable, Happy Trader conventions, long only, 36 closed trades. It's almost nothing in commissions, maybe $1.50 per. We have percent profitable at 30.56, totally perfectly aligned with Happy Trader conventions. In fact, when this starts to creep up to 38, 40, 45, you almost get an indication that the market is overheated, where right now it's starting to breathe, right? And even though we're in an uptrend, we have had a breathing out of Ethereum. And you can see the max drawdown's nasty. So again, you want to learn how to hedge, you know what to do. And average trade expectancy is wonderful at $520. So between all of your winners and losers that you had for the year, your average, what you pulled out profit-wise, is going to be $520 per trade. So very, very good there. Total closed trades 36 is really nice for 6+ months, right? Can't argue there. Total profit 33%, crushing the S&P 500. This would be about 3 years of gains in the S&P 500 in 6 months using Ethereum. So we have the net profit at 18,750. Obviously, that's good. To arrive at the net profit, we just subtract the gross loss from the gross profit, ending up with the net profit. Really easy peasy stuff. Drawdown, you're always going to have drawdowns unless you're using a strategy with a higher Sharpe ratio, meaning there's more risk management in place. Then you're going to see a dramatic decrease in performance, but you will see a dramatic decrease in drawdown by raising Sharpe ratio. That's something we're going to talk about in another video of why we run lower Sharpe strategies that are counterintuitive to classic ARB and high frequency strategies. This is all very intricate stuff that needs to be discussed, and really there's not a lot of authorities out there kind of talking about it. So let's compare this with the long and the short. So we know we did 33% on the long. Let's bring up the long and the short, and we're going to run the same exact back test and see what happened. And it looks like a total disaster. Okay. So, this goes to show when you're trying to short the market, this is something that I've been saying in a lot of videos. And really, frankly, this is the point of this entire backtest here, the long and the short, is if you're going to short the market and you're going to do it over a long period of time, you can see that it's just not going to work well for you. Now, there are some exceptions to the rule, completely sideways stock, things like that, but we're dealing with futures derivatives, right? So let this serve as a cautionary tale to not short. And again, this is not financial advice, not short. If you're trading from signal to signal, I don't recommend ever shorting the market, especially in what I would refer to, like I said before, as kind of like a quasi bull market. I don't feel like we're all bulled up like we've been in previous bull markets, but every market looks different. Point is, shorting Ethereum specifically is a rough go. And we can look at the performance summary through the overview. We can see that we're now down to 1 out of 4. We're well out of bounds for happy trader conventions. And this is why I recommend just dealing with the long only. So long only is going to give you your best chance for a good expectancy. You can trade lazier, and that's really all there's going to be to that. So long only is certainly where it's at for Ethereum. Now let's go down to the 30-minute chart on the long only. Let's look at some different time frames. You can see we go from 33 to 39%. Our trades go up marginally. Now let's go down to the 15-minute chart. And you can see that that's our shining star right there. 15-minute chart. Again, little more pronounced of a drawdown here. As you get down in granularity, your trades are going to go up. Your drawdowns are going to be a little more pronounced, but your max drawdown doesn't necessarily have a correlation there. What we look for is kind of the average trade. That'll tend to go down with a smaller time frame, but our happy trader conventions around this 30 to, let's call it 35, 38, even 28 in certain circumstances. Anywhere in that range is going to mean we are executing properly. And then if you go to the trade log, you can see, sure, we start out with a lot of losers. We had 3 days of losers. Must have been pretty bad, right? But then you were rewarded and paid handsomely, not only back what you lost, but then some, right? So you had a huge winner there, and you can just go through the trade log and see that you go on these crazy losing streaks. You're only going to win 1 out of 3 trades, but when you get those winners, they're going to pay big, and that's what makes happy traders such a great indicator, and in my opinion, the best indicator that you can get out there today. So that's really going to do it. You can see even on the 15-minute chart, not bad, 105 trades times $1.50, let's call it. That's really going to be what your commission's going to look like. So you can see here, 78% in 6 months and change. My name's Ryan, CEO and head quant at Happy Trader. Have a great day and happy trading.